Test. I guess the sound's coming through now. Sorry, my mic was accidentally unplugged. I must have knocked it or something and it got unplugged. So let me start over, guys. Welcome to today's daily analysis. Today is Thursday, the 25th of March, 2021, and time is now 10:03 a.m. here in the UK because I had a mic issue and we're starting late now. So let's get into the analysis, guys. First things first, let's discuss AUDUSD. In yesterday's analysis, we talked about a potential short on AUDUSD in the event that this green line here was broken and closed below. What we were looking for is a short of this head and shoulders pattern. Now, I realize this is not traditionally how head and shoulders patterns are traded. I know that people trade head and shoulders using a trend line to establish the neckline. It's called a neckline because this is the end of a shoulder and this is the end of a shoulder, or the start rather, and the line between them is called the neckline. So this is how I understand it anyway. Honestly, I've never traded it like this, so I could be a bit off with this, but I believe that they look for a break and close below the neckline, or maybe even just a break, and then they enter the trade here. So they would have been short from there. Now, I don't particularly like that style because I think there's a pretty strong possibility that this support area is going to hold up. And if that support area holds up, then that would be a failed trade. So what I'm looking for with this head and shoulders is a further push beyond this green line here for a short trade. But if it stalls out on support, which it appears to be doing right now, I'll be looking for a long reversal trade, much like we got over here. So that was a long reversal, or bullish reversal, or even a continuation if you want to call it that, based on this support area. Price came down, bounced away. So I'm also open to the opportunity of taking a long trade if the support area and the green line manages to hold back this bearish movement. If it doesn't manage to hold back the bearish movement, if it pushes below support, if it pushes below this green line and closes below it, then I'll definitely be looking for a short trade. So I have two potential trades here, a long or a short. We just need to wait and see what price gives us. Now, when do we know? The close of today's daily candle would be a pretty good sign, because that will tell us what is probably going to happen. If it doesn't manage to get any lower today than it was yesterday, because right now the lows are equalized, it didn't break yesterday's daily low, that would be a pretty good sign that things might be turning around here. So yeah, I'm just going to keep a close eye on this one. Look for a long trade right now is the stronger possibility, just because it is stalling out. But hey, by the end of the day, this could just completely smash through this green line. There's nothing stopping it from doing that, really. I mean, there is support, but when I say there's nothing stopping it, I just mean it's not like support doesn't get broken. Support has been broken in the past. Otherwise, the charts would never move anywhere. So it could very well push down. Just got to keep our eyes open on this one and see how it goes. Right, CADJPY, we're looking for a potential reversal here yesterday. Unfortunately, the way this candle closed yesterday, it makes it pretty tricky to get into an actual trade here. Yeah, this one's just off my charts. I'm not interested in this anymore. That's gone. CHFJPY, is anyone long in this one? I wasn't too interested in this one. And I haven't been as active in the forum as I should have been the past few days, but I'm working super hard on getting that new YouTube channel up for crypto analysis, which a lot of you guys want, and some of you guys don't want. But for those of you who want it, I've been working really hard on getting that YouTube channel up, and that's led to me not being able to spend as much time on the forum. So I have Magnet on. No wonder it's going all weird. There we go. And I'm also working on a trading view course for you guys. That way, those of you who struggle with using TradingView can get a better understanding of it. So yeah, I didn't see this post on the forum, but I do see a lot of you have responded to it and in the trade, which is cool. Nice. This is a decent example of a range trade, by the way. It's something I always say about ranges, that just because you get a breakout from the top or the bottom of a range, it doesn't mean the range is over. A lot of times you'll get that break beyond the top of the range or the bottom of the range, and then price just gets sucked back into the range, and then things continue bouncing within the range. So this is a good example of that, by the way. It's not that important to this specific trade right now. I'm just illustrating that this is how ranges work. Now, yeah, if you're in this trade, just leave it open. I'm not in this one. Like I said yesterday, I wasn't too interested in trading this one. I just feel it's too messy. It's a bit too risky for my personal tastes. You could see that most of the time price takes a long time to get through here. Sometimes it'll go straight down, but a lot of times it'll take its time kind of getting through here. And there's a lot of crazy wicks back and forth. There's a lot of crazy movement. I think it's pretty easy to get stopped out on a pair like this, especially if you're trailing your stop up with all these crazy wicks, as you see there. Like every candle almost has some pretty huge wicks. It's easy to get stopped out if you're trailing that stop up. So I would suggest a wide trailing stop if you're doing that. And when I say trailing stop, I don't mean those automated trailing stops your broker gives you. I just mean like when you're manually trailing your position up. So, you know, it moves up to 1R, you move your stop to half an R. So an R is basically the size of your stop loss. It's a ratio thing. Your stop loss is 1R. Your target is 2 times the size, so your target is 2R. So when your current open position is at 1R, which would be roughly here, you move your stop loss to 0.5R, which would be half the size of the stop loss. Then once the floating profit is 1.5R, which would be roughly there, move your stop loss to break even. So that's a pretty common way to trail a trade up or down if you were in a short. Now, because this trade in particular, or because this pair in particular has pretty big wicks, you'd probably want to trail further back. So maybe wait till it hits 1.5R to move your stop to 0.5R kind of thing. I'm not sure what you mean by tails, but as far as I understand, as far as I remember, tails is just another name for wicks. When a candle has long wicks, it doesn't really mean anything. It just means the high and low. Wicks represent the high and low over the period of which the candle was open. So this candle was open for 1 day. The bodies are the open and close, and the wicks are the high and low. Big wicks just mean that it's a pretty volatile pair and that it swings back and forth a lot throughout the day. That's all it really means. So if you're in a trade that's swinging back and forth throughout the day, it's very easy for your stops to get hit. I don't know, maybe... I've always just called them all wicks. You know, there's no official terminology anyway. There's not like there's a Forex dictionary or a trading dictionary where things are officially defined. I just call them wicks, no matter what side they're at. I'm sure there are some people who call them tails because I guess, I mean, a wick comes out the top, a tail comes out the bottom, so whatever. I don't know. I call them wicks. It's like the people who keep telling me, don't define your risk as 1 to 3R. It's 3 to 1R or 3 to 1. Don't. So if my stop loss is, if my target's twice the size of my stop loss, people say you're supposed to say 2 to 1R, which makes no sense to me because it's risk to reward ratio. So the risk comes first, the reward comes second. Why are we flipping it around? I don't know. Everyone has their own way of doing things. Yeah. Anyway, New Zealand CHF. This one looks a little bit better for a reversal, but I'm not crazy about it. But if you really want to, you could potentially enter it along here, something like that. Doesn't look great to me. I'll leave it up to you if you want to enter that one. Let's look for some new setups. It's been a pretty slow week. Some weeks are great, some weeks are slow. Potential breakout on CADJPY, but I wouldn't really look at this until next week. And even then, there's resistance right above it, so it's a super risky one. I'm just going to put it on the list because I want to look at it next week. Technically speaking, it could break out this week, but it would have to be a pretty significant move. It would have to, get above this green line, which probably not going to happen this week. But yeah, I'll just keep an eye on it. Yeah, most aren't strong. New Zealand had a bit of a crazy move at the start of the week. Maybe GBPCAD could be giving us a reversal. Long reversal from this support area on tomorrow's daily candle close, or if you want to, you could enter almost right now. As soon as it breaks above, enter at the 1.7235 on the 12-hour. I'm not going to do the 12-hour. I think it's a bit too risky. I'm going to stick to the daily, just going to wait for a daily indecision candle to form, and might be a long trade here tomorrow, maybe. I feel like New Zealand went crazy, but that's pretty much it. I'm a little tempted by this USDCAD short. I'm a little tempted. It's with the trends, nice little continuation. I've been burnt so many times by USDCAD this year. I think every USDCAD I've taken is a loss this year. You can't really let that affect your trading. You can't say, oh, I've taken a bunch of losses on USDCAD, so I'm going to stop taking USDCAD trades just because you took 3 losses, 4 losses. It doesn't really mean that your next 10 trades on USDCAD aren't going to be profitable. But I still have, I must admit, even though I know that, there's still some part of my brain that's like, USDCAD has burnt you so many times, stay away. That being said, that's funny, Dave, because USDCAD was my best performer for years. USDCAD is such a good pair sometimes, but yeah, lately it's just been pretty crap. But yeah. When you say worst performer, like, what how many trades are we talking? Are we talking 5, 6, 10 trades? Or are we talking like a nice sample size of like 50? Or at least 30? Because until you hit that kind of 30 trade benchmark for analysis, or for statistical analysis, yeah, Dave, it's kind of like it's very useless. Not useless, but that amount of data, you can't draw any conclusions from it. So like I was just saying, don't use that little amount of data to judge how profitable this pair is, because you could take your whatever your most profitable pair is, the next 6 trades you take on it could be losses, and then the next 6 you take on USDCAD can be wins. You need like a bigger sample size. 30 is a good amount. You shouldn't make any changes to your strategy or to the way you're trading without a good sample size. Yeah, anyway. Open to taking this short trade here. This could be entered today. I'm open to taking this short trade. Risk to reward ratio is not fantastic. Could enter on a bit of a pullback. Yeah, it has some potential. I'll give this one a go. This one's my favorite of the day, to be honest. All right, let's take a look at USDCHF real quick. Nothing that I want to trade there. No. USDJPY. So CADJPY for some reason was at the bottom of my list, so I'll bring it to the top, and there's nothing on there. Right, so let's do a quick summary, guys. JL, what's the green line based on? You should watch State of the Strategy 1 and 2 in the members webinar section. So go to the member webinar section. And watch our State of the Strategy. Because I could tell you what it's based on. I mean, it's based on highs and lows of recent candles, but it's not going to be much use to you until you understand the setup in full. State of the Strategy was held on the 11th of Jan and the 12th of Jan. So if you're looking at the members webinar section, it's sorted by date. You just want to scroll down until you see the 12th and 11th of Jan. Yeah, so a quick summary, guys. AUDUSD, 2 options here, potential short, potential long. We just need to see how today's candle plays out to give us an idea of what we want to do with this pair. USDCAD, potential short trade. I'd enter on a bit of a pullback, so I wouldn't enter right here. I'd wait for it to break maybe down to the 1.2536 and then pull back to the 1.2545. That way I have a bit of a better entry. CHFJPY, this one is actually an open position. I don't know why I have it here. I'm not in this one, but some of you guys are in. Looks like a good setup. You know, hold on to it. New Zealand CHF, potential long here. I'm not interested in this one. I'm putting it out there because it is technically a valid setup. It's just a bit of a risky one. Putting it out there for those of you who want to take a slightly riskier setup. Reason why it's risky, just briefly, it's already broken through support, and now it's trying to push back up through support. I think it's very possible that the support area has become resistance, so you might get triggered in, and then it'll just, you'll get a wick up to here, you get triggered in, and then it just continues down because support is now resistance. It's hard to tell sometimes if supports become resistance. I just think this one's a bit tricky, and I'm not interested in it personally. GBPCAD, just going to wait for today's candle to close and see if there's a potential long here tomorrow. You could enter on the 12-hour if you want. It's actually just triggered on the 12-hour, just made a new high, but potentially too risky. Depends on your risk appetite. For me, it's too risky. And finally, CADJPY, just a potential breakout here. So, that is it for today's analysis, guys. Is there any questions? David, I wouldn't wait for a retrace. I'd just dive straight in. Also, it depends. I mean, it depends how far below it closes. If it were to drop like down to here or something, there's no way I could place a safe stop loss beyond the green line and beyond the resistance area, former support area. So I wouldn't even bother entering the trade. But if it were to drop, I don't know, like down to here, I'd enter right away. So if it drops low enough, then I would definitely look for a retrace. But if it doesn't drop that low and I can get a good stop loss in, then yeah, I would just jump in. Right, guys, so I'm going to wrap this one up. Just a bit of an update on that crypto channel. We're working hard on putting it together for you guys. And when it's out, I'm going to be doing a separate kind of analysis or something on cryptos. It won't be as regular as this analysis. And it will be completely free. Don't plan to charge for anything in terms of cryptos. It's just something that I'm doing and I'd like to share because it's a lot of fun and it's a lot of profit to be made. So I want to share the wealth, I guess you'd call it. Lisa, I almost always just go for the daily. There's no like trick to determining what time frame you should enter. It just depends on how much risk you're willing to take. Because the lower the time frame, the higher the risk. The higher the time frame, the lower the risk. So if you went down to like the 5-minute time frame and entered as soon as a line was crossed on the 5-minute, that'd be pretty huge risk. But you could do that. If you wait for the daily, it's less risk, but you have bigger chance of missing the trade because a lot of times it'll go down way too far by the end of the daily candle, and then you can no longer get into the trade. So it's just up to you to decide how much risk you want to take on any one trade. Just the lower the time frame, the bigger the risk of a false move. And what's a false move? Well, on the daily, a false move would look like this spiking down, you entering, and then over the next 2 days, price does something like that. So the false move would have been the spike down. On the daily, it's just a little candle. It's just a wick of a candle. That wouldn't have got you into the trade on the daily. But on the 12-hour, on the 8-hour, on the 6-hour, on the 4-hour, that could very well have been a close below that would have triggered you into the trade. So there's no kind of way to determine it. It's just how much risk do you want to take. You want to go down to the 5 minute, and as soon as a candle closes below this green line on the 5 minute, you enter the trade. Nothing wrong with that. It's just huge risk. You're going to take a lot of failed trades, but you're going to be able to get into way more trades than me because I miss a lot of trades by being stubborn and waiting for the daily. That's because personally, I'm happy to take one trade a month. If I have a very slow year, I mean, I probably wouldn't be happy, but this is just an example. I'm okay with taking few trades. In a very slow year, if it comes down to it and I'm taking one trade per month, I can survive. It's not like I'm gonna go hungry. It's not like it bothers me that much in terms of financially bothers me. But not everyone is in that admittedly fortunate position. Some of you need to take more trades. So for you, you might want to jump into 12-hour and 8-hour and just accept you're going to take more losses. You're going to get faked out more, but you're going to catch a lot more trades. And, maybe at the end of the year, that results in more profit. And then some of you, you have a side job, you have a job, and trading is just a bit of side income for you. So maybe you want to just trade the daily because it's less work trading only the daily, less risk, less stress, less trades, but that's fine because it's just a side income to you. So you just have to figure out where you fall on the spectrum of risk. How many trades you want to take per week and go with that. If you need help doing that, feel free to reach out. Righto, guys. So I think that's it for today's analysis. Thank you very much for attending. See you guys for tomorrow's... No, sorry. Today's Thursday, so there won't be an analysis tomorrow. I'll see you guys for Tuesday's analysis, which should be at the same time of 10 a.m. in the morning UK time. So thank you guys very much, and I'll see you later.